Hello guys, welcome back. It's CryptoMainly Lee here. Just giving you a quick update on the charts and things. Have a look at Bitcoin and what have you. So this is, as you know, guys, this is the website. If you'd like to, have a look, enter your email address and Telegram name in there if you'd like to be on the mailing list. And obviously, there's all the links to things that we do. So the YouTube channel, X, everything basically is all in one place here. So there is some good information on here as well, guys. If you open this up on mobile, it comes up with the crypto prices as like the first thing that you see, which is quite handy if you want a quick flash of the prices that you're interested in. So these really, top 10. You can also obviously click on the links here, so it takes you to CoinGecko, or you can search for the coins in there. So for example, I don't know, if you wanted to go for something unusual, let's say Floki, for example, and you search, it does actually bring up the CoinGecko details about that coin and things. So there is quite the website itself is designed really to be like a landing page for you, so hopefully you find that useful. And obviously links to everything I do here in one place now. So Indicator Lab, there's a couple of things being updated at the moment. So obviously just battling out the trading view, just to get everything, the script and things, as per the house rules and what have you. So once those are all approved and everything, then being part of the VIP group will give you full access to that. Gbot is still under production, under optimization, shall we say. So for those of you that are interested, with the $3,000 account, you can see that you're looking at about 4,500. This is going by back testing, of course, on an hourly time frame, on a 2-hour time frame. It's about the same, but obviously a bit more success rate on a higher time frame. So just finalizing the optimizations on here, guys. This is back testing, and obviously you can't use back tests reliably for live testing. So I am forward live testing Gbot at the moment, just so that you know, guys. And I will be re-adding the signals and things back into the group very shortly. In addition to that, guys, the new indicator that we have is this one here. So like I say, it's not a new indicator as such, but it is the bars at the bottom there, and the price bar chart at the bottom right hand corner. That's new. So this part of it has been changed, and I am running a bot against this as well, which obviously initially is showing some really good signs as well. So hourly time frame, it's about a $3,000 profit in a year with a $3,000 account. 2 hours, it's more like 4,000 on it, and about 70% of the trade's profitable. So again, I'm live testing and forward testing this strategy, guys, but that's something else to look forward to in the group shortly. This indicator is pretty well, although I say so myself, it's amazing. I mean, the hybrid indicator coupled with the new candle confluence colors and things, it's extremely good. I mean, for example, if we look at this, it's giving you a bull signal, although the price broke below the support there. It was telling you that you're about to get a move to the upside, and 30-minute time frame again. So you can see as it's moving up the time frames, you get the bullish crosses as it moves up the time frames, and that keeps you in good stead of whether you should be holding the trade or not. Certainly gives you an indication. As always, guys, no indicator is 100% accurate, but it is very, very good. And you can also see on the hourly time frame here, the blue line there is actually tipping down, and the moving average is coming down, and we're looking for the blue to cross the green to get the bullish signal. So you could say that the 15 and 30-minute time frame is reasonably strong, but we need to see that 30-minute time frame push this price up to then change the for us to see the blue tip up and cross the green moving average for then the next the next leg to take to take effect. So you can see this bottom right bar here. This gives you the averages. So you've got this is the average move. So if you get a bullish, so this is an hourly time frame at the top there, guys. If you get a bullish cross on, so the blue line crossing the green, so the blue line is the RSI stochastic composite with volume, okay, and obviously once that crosses up, that would be a bullish cross. You get an average move of $1,000. Median move is about 760, so probably best to go by the median move there. And then it gives you the average number of bars before that move is complete. Also gives you the maximum number, and obviously then you've got if it happens in less than 5 bars, 82% of the trades happen in less than 5 bars, and 88% happen in less than 10. So it gives you a range of what you're looking for in terms of time frame, as well as price move. So $1,000, so $760 to $1,000, somewhere between 3 and perhaps 5 bars would be a sensible objective for that one, for example. So the time bar at the bottom there just tells you that based on your inputs here, when whether you're getting late in the trade or not. So grey areas would be where you'd be expecting to see some kind of change of direction. So the grey area there, as you saw, change of direction here, grey area here, actually was the change of direction at the top there. Then what you get is obviously the size of the move. So basically, if you've got a bearish cross here, you then get red candles, and it counts down the number of red candles. So it tells you, depending on what settings you have here, so it will count down the 5 candles. And obviously, when it starts to get late in the trade, sort of to the 10 candle mark, it will change color. So you've got grey, you've got the bearish cross, and then obviously you've got the colors that tell you, whether you're sort of late in the move or not. And the same for the green. Once you get a green bullish cross, the same again, it counts out and tells you whether you're late. So green to start with, then it goes into yellow to tell you that you're quite late. So there's 4 colors basically. You've got green and yellow, and then obviously you've got the red and orange. So green and yellow for bullish moves, and then red and orange for downside moves. And yeah, I mean, it's as I say, no indicators exacting, and you can see here I've put just a support and resistance line on there from the 4-hour time frame, just based on the supports there, and you can see again it's telling you that we've got some support going on there from the lower time frames, but as you can see here, the blue line is actually still looking like there's still further downside pressure. So what we're looking for is for the 30-minute changes from hourly and for the price to go up, and obviously then for the blue for them to tip up above the green, and then you'd be expecting another $2,000 move to the upside with an average of 4 candles, maximum 16, and most candles between 4, less than 10 candles, 90% of the moves are done. So between 4 and 10 candles would be probably what you'd be looking for sensibly to see around about a $2,000 to $2,500 move. As you can see, it can be anything up to $8,000 on the bullish cross on these. So it is quite variable. So bear in mind that these are just averages, guys. But the average time that the moves are complete, comes in very handy for this type of thing. Particularly if you're scalp trading, and obviously on higher time frames, then obviously it gives you, you can use this to your advantage, obviously on higher time frames as well. So it works across any time frames basically, guys. So those are the 2 things. So GBot is is coming soon, shall we say? And this strategy here is going to be something else. I haven't thought of a name of it yet, actually, but this is going to be based on our color, what we've called there. Where are we? The confluence gradient. So that the color of the candles basically, and this is a strategy at the moment. It's called the CryptoMainly hybrid 2026. Very long name there, but I'm going to change that obviously. Okay, guys, so let's have a look at the charts then. So we're looking. I just want to show you this chart firstly, which is something which I noticed that was forming. We've got almost like an inverse head and shoulders here. Obviously, a huge collapse in price down to the bottom, a very heavy bounce, $10,000 bounce, and now we've got this area of consolidation. So it's not sort of you've got the shoulders here, you can see, okay, and then you've got the head sticking out, so you've got the green box, makes it a little bit clearer. Obviously measured move from this would take us up to about 78,000. So if we measure the inverse head and shoulders, obviously the measured move is from the head of the shoulder to the base, so that fib there gives us a price projection of up to sort of $77,000. So probably between 75 and 77. You can see that there's a red line of resistance here. You can see that there's lines which I've marked on here, which is going to be quite heavy resistance. So perhaps between 75 and 77 if we're lucky. If that plays out, of course. Now, obviously, what we've got to be careful of is, at what point does this get negated? Well, obviously, if we start to lose, the lows here. So the low there is 67,286. So if we start to lose this low, you'll see that then this right shoulder, if you like, is then going to fall far below the left shoulder. If it comes back down, then obviously that will negate this pattern. And then obviously what we would then be looking for is what we're hoping not to see is something like this, where you get price come down and then break this this line here. So you've got a neckline there. If we break down there, then we will likely see something like this, and we'll end up seeing prices down. The measured move, if this does break down like this, if we do get that type of pattern, incidentally, is the measured move is the opposite to the inverse head and shoulders. So what you're looking at is the measured move from there to the point of the breakdown. Okay, so you've got the high or the neckline, probably to be a little bit more conservative on there. Personally speaking, I would probably actually just use the neckline here. Okay, but anyway, you get the idea, guys, and that would take us down all the way back down to 59, so closer to $60,000, and obviously the wick low here. Okay, so I'm just going to mark that on there so you can see that, but that wick low of the collapse. Now, it does make sense that wicks and tails like to be eaten, as they say. So it would make sense if we come down and actually get deeper into this territory here before we see any kind of upside move. But I think if we do come down here, then it's going to be we're going to end up seeing the collapse is further down, so perhaps down to sort of 55. But as with anything, guys, you look at the higher term time frames. There's going to be bounces. There's usually bounces along the way. This is something we've been looking at for a while now. We had the heavy breakdown. You can see in the background there. I'll just make that a bit clearer for you by going like that. You can see that this is the AB equals CD. Okay, move, which obviously is so you've got AB, and then obviously you then got the CD. So, and that came right to the bottom of the tip there. So that move in fact is complete. So that ABC correction is in fact complete. You can see we've got a nice bounce, and obviously now we're back into the territory of we've got a low here, which I'm going to mark as well on this chart, on this one as well. We've got a low here, there. Okay, that's going to be significant. That's the 60,000, which, as I say here, if we break down and things, that's where we're going to end up, back down to the 60,000 mark. So you've got, a bit of confluence there, as to say, we're going to come back down to this at some point. And obviously you can see this, there's a very significant support line there, which goes all the way back down in fact to 2018. So this red dotted line here that we're bouncing along, if you like, we haven't actually even reached it yet, but this dotted line here needs to hold. If it doesn't hold, which there's every chance that it doesn't, I actually think we'll end up probably somewhere down around the around into this somewhere between 35 and 40,000, I think, is where we get like the final capitulation going into the end of the year. That's what I'm expecting. But there's every chance that this significant trend line here continues to hold, and instead of us breaking down here, we go sideways for a long time, and obviously and then obviously break out and continue off to the upside. Now, generally speaking, in the past, what you've seen on at the time of the halving, you can see where I've marked the halving there. It's usually, the price is usually about 60% of the all-time highs. So as you move into the halving, so looking at this, if we were going to be bouncing along there, then we would be at the all-time high at the next halving. So that would be very different. But then this structure itself is very different to any previous cycle. So there is a chance that that could happen. But if we look back through previous cycles and things, the chances are, the likelihood is that we break down further. We see some consolidation, some bouncing around here for a while. We see some, capitulation down, and actually, we end up somewhere between 35 and 40. That's between 35 and 45,000, let's say, somewhere in there. Sort of later in the end, then we can start to climb our way up. And into the halving, and then usually we're about 50% of the price at the halving. So 129,000 was the high, so we'll be looking at about 63,000 moving into the halving. So that's if we go by previous cycles. So guys, and as I say, you can't I mean, the cycles are so similar that you could say that that's the likelihood that that's what's going to happen. But in light of the fact that all of this little area here is where all of the sort of the ETFs were launched, and this is where the big institutional money came in, and that that is at around about the 40,000 mark, 40 somewhere between, in fact, it was the 10th of January when, as you can see up here. So the 10th of January is, let's say, the candle there, that's the 8th of January. So you had a low of 41,500 and a high of 49,000. So between 40 and 49 is, somewhere in this region is where I think we'll find the most battle and the most support. But there is a chance that we do just dip down into this liquidity and obviously then see, perhaps 35 to 40,000 later in the year. But yeah, it's difficult to tell, guys. You can see why we've paused here. You've got obviously, this area of consolidation, and you can see why we've bounced down there. The AB equals CD correction. You can see why the wick, bounced there as well. That was the move completion. You've also got this blue box, which is, as you know, I've described this before. But what I wanted to see was, how far this low had come below this, the previous all-time high. Okay, so what I'm measuring is, let's just show you. So from this high, how much, how much further did it come down? And 21.87% is the measurement. And that's what I've done here basically, is I've measured from the high, the 21.8%. Where does that leave us? And again, we're back into this same sort of region here. So that's what the blue box represents in the background. So we are actually, in terms of the correction, in terms of speaking about the correction, we have actually reached almost the point where we corrected the previous cycle below the all-time, the prior all-time high. So this is 69,000. Take off the 21.8%, and obviously puts you into this region. And you can see there GBot's busy in the background, but you can see there that why this area of convincing is of great interest. And obviously let's hope that this support line here does hold us, does hold going forward. And if that's the case, then there'll be sideways consolidation for a long time. I think the bottom, particularly, we could even see that we just trudge sideways in this little triangle here all the way up until October. Wouldn't surprise me. But if we look at the fractal here, this fractal here is obviously is from this side. Okay, so this fractal, I'll just show you this one. That's basically this move here. Okay, and it doesn't have to happen in exactly the same way, but you can see that it is very similar. So it would suggest that we are going to bounce down, come back below this support, and then carry on from the bottom there. If we look at the total chart, you can see that the wick low here is what's given us some support. So there is a chance that because we last week we found support above, and obviously we are below it now. Sorry, we are finding support still now. We are sort of trying to punch our way down, but we are still above this support. So it would make sense that we get at least some bounces and perhaps a little bit of consolidation here for a while to come. Just one thing I want to just check on there is so what I'm just checking now is the 50% level for this candle. Okay, so this huge candle here, just checking where the 50% level is, and you can see that if we can hold the sort of the open of last week, you can see that actually we are still above 50%. Okay, so we're in the top portion of this range. Okay, so it would make sense if we can. So last week's close obviously is going to be critical. Okay, but if we do see that we manage to stay above there, we are staying above the 50% retracement, which means that obviously, so we are in the top bullish half of the breakdown, if you like. So that would make sense. So for us to get some upside before we see downside. And as you know, guys, usually when you see any kind of breakdown from support, you get that kind, you do get a retest of some sort. Doesn't necessarily have to happen like that, obviously, like I've just drawn it, but it would make sense. It wouldn't be surprising too much if we did see some kind of retest and then come back down. But what would probably happen is this would be a massive bull trap for everybody. People would start to get really excited, start thinking everything's back on, particularly if we look at the Bitcoin chart. We'd be back up to, if that happens on the total chart, we'd be back up above perhaps even as high as, perhaps even above that $85,000 mark into this territory. And I think if we do get above that 85,000, I think that's, probably wishful thinking from where we are now. But if we did, you can imagine everybody would be, turning into, super bulls again. And actually, it wouldn't be all it would be is just, a move and a retest of the breakdown of this support here. So, nothing really too much to get excited about, albeit that would be a nice move, and you would get some, nice price action from that. I mean, if we move and we did a retest of this breakdown, for example, we're at 69,000 now. The breakdown, is at 93,000, 94,000. You can imagine everybody would get very excited if we do get back up there. But as I say, guys, if you look at the fractal, it looks like we might get a little bit of sideways movement, and then this support ultimately breaks down as we go into the back end of the year. Okay, guys, that's just my thoughts on things. So hopefully you've enjoyed the video today. Sorry if I've waffled on a little bit too long. I do tend to do that. But all the best, guys. Thanks for tuning in. Thanks for listening. Take time to go over and have a look at the website and just put your name in there to be on the mailing list, and your Telegram name. And obviously, come and join the Telegram group. Feel welcome in there. Got a nice bunch of great people in there. So thanks very much for listening, guys. All the best. Take care. Speak to you soon.